Good morning, everyone. Welcome to another panel at this year's Responsible Investment Live conference in our virtual Paris. ESG is all about regulation, if we make it work, and we're in sort of a transitory phase here in Europe and all over the globe, I would say. So apparently a topic we would be dealing with today, and I'm very honored to welcome some high caliber guests to this panel. Firstly, it's Floortje Nagelkerke from Norton Rose Fulbright, Amsterdam's office, and Floortje will give us an introduction into the status quo of European ESG regulation in a minute. Welcome to the floor, Floortje. Hello.
Hello.
Then we want to discuss Floortje's findings together with Elisa Thal, who's a senior policy analyst with PRI, apparently very competent on all issues and implementation. Welcome, Elise. And secondly, it's Paul Garte, investment manager with Bond Venture, really the most seasoned impact investor, GP in Germany, I would say, with many funds under his belt. Hello, Paul. Good to have you with us. From the Frankfurt office of Norton Rose Fulbright, I welcome my old collaborator, Caroline Herkschröter, to the panel, and she will give us some insight about her clients and their ESG appetite. Apparently, my name is Thomas Jesch. I'm the managing board member of the German Association of Institutional Investors. So, Floortje, the floor is yours. What about ESG regulation? Where do we stand at this day?
Well, thank you very much for the introduction. And well, we have quite a lot of regulation already in place. So I think sustainable finance has played a very key role to deliver the policy objectives under the European Green Deal, as well as the EU international commitments on climate and sustainability objectives. And therefore, they have taken a number of steps and published a number of regulations already so far to build the sustainable financial system. So it seeks to sort of integrate the ESG considerations into the investment and advisory process in So we have a number of regulations in play, which are the EU taxonomy regulation, the sustainable finance disclosure regulation, the SFDR, and the benchmark regulation. And those three form the foundation of the EU the transparency and provide the tools for investors to really identify sustainable investment opportunities. And all these rules are currently laid down in regulations, which means that they are directly applicable in all EU member states and don't have to be transposed or implemented into local legislation, which means that it can be enforced quicker. Would be a directive, but also that there's issues with interpretation in the EU member states. So all rules should apply in all the member states in the same way. So really quickly, the taxonomy regulation is the establishment of a framework to facilitate sustainable investment. And it establishes an EU-wide classification system or taxonomy intended to provide businesses and investors with a common language to identify what degree economic activities can be considered environmental. It's intended to ensure participants who offer financial products as environmentally sustainable investments or as investments with similar characteristics to make it clear to investors why such products can be considered as such, because they really want to prevent, say, the so-called greenwashing. So therefore, they are establishing a uniform criteria established at the whole EU level, even though you could argue that you may even want to have it on a global level, but we just start at the EU level. The taxonomy regulation has already entered into force, and there are now already some delegated rules underneath that have been published in draft, but that needs to be still also be adopted and published. And we have the benchmark regulation, which amends the existing benchmark regulation to also include certain rules in relation to, say, the EU climate transition benchmarks and the EU Paris aligned benchmarks. So they also need to disclose certain sustainability related disclosures and make sure again that that is harmonized. And then we have the SFPR. So those are rules that relate to sustainability related disclosures, again, in the financial services sector. So mainly those apply to asset managers, to fund managers, and they really have to make sure that they provide clients and investors with certain ESG related information in relation to the provision of their services and the marketing of certain financial products using mandatory disclosure templates where applicable and where available. Currently, we only have sort of the regulation, but most of the rules that are now included in the regulation will be further detailed in further regulations. And currently, the EBA and ESMA and IOPA are working on making proposals and draft rules in relation to those further details. So they have published their final reports in March of this year. And so even though the rules already went into force in the beginning of March, those were only the high level rules. So that was quite tricky for market participants to make sure that their documentation was already sort of meeting the requirements without knowing what the real detail would be. And they are still now planned to come into force by the end of this year, but we will just have to see whether that is indeed feasible. And then I just wanted to touch quickly on an additional package of measures that the European Commission has adopted in April, end of April, and that relates to the EU Taxonomy Climate Delegated Act, a corporate sustainability reporting directive, and also some delegated acts which amend current legislation in relation to, for instance, insurance products that also have an investment aspect in that regard, and also for the insurance financial intermediaries to make sure that when they provide advice and when they produce products which they will market to clients, and that those also take into account the wishes of the insured and the clients, that whether or not they want to make sure that sustainability is taken into account in the whole process, in the product, and also in then the portfolio for the clients. So there's there's already quite a bit out there, but there's still a lot to come, and mostly the detail. And I think what we all know is that always the devil is in the detail. So we need to pay close attention to the new publications to come.
Right. Floortje. That's a lot on the table already, and you have outlined that there's a lot more to come, and you really highlighted the issue of information, right? Can the data gathering keep track with the speed of regulation? I think that's one of the issues to be discussed within our panel. So, Elise, looking at what Floortje has indicated here, are you as an organization with the UN background satisfied with the European status quo in terms of, sort of responsible investment fitness? Is this a nice enough regulatory framework? And do you feel that we now should leave some time to implement it for all market participants? Or what is your judgment, Elise?
Hi, thanks for the invitation. I think we're very pleased with the overall direction of the travel. We see that despite the COVID crisis, sustainable finance has remained very high on the EU political agenda, as Floortje was saying, and we've reached important milestones and achievements as well on the international level. So in some ways, the COVID crisis has also been an eye-opener and an accelerator on ESG issues to many. And this has been seen as an opportunity to build back better, linking sustainable finance policy agenda further with real economy issues. So the maybe one and only positive impact of the COVID crisis is that it has demonstrated the importance of resilient societies and economies supported by sustainable financial system. I think a good example of a further real-world impact consideration in the EU is the commitment on the climate law and the European Green Deal investment plan, with the specific COVID recovery package and the next generation EU fund, for instance. And at the PRI, we really welcome all the efforts of the EU and commitments to align COVID recovery planning with sustainability goals. There's been great progress and numerous initiatives, as Floortje was saying, with the EU taxonomy, SFDR, the Corporate Sustainability Reporting Directive, a sustainable corporate governance initiative as well. And I think it's important to take a minute to acknowledge the tremendous amount of work which has been achieved by the Commission, the co-legislators, the European and national regulators, as well as numerous experts involved in the sustainable finance platform. And there's still a lot in the pipeline, with a revised sustainable finance strategy to come, the green bond standard, eco-labels, further taxonomy development as well. So the status quo, as you were saying, is actually still changing. And I see actually four main challenges ahead of us if the EU really wants to pass the responsible investment fitness test, as you put it. There is a sequencing issue first. So we need to sort that out at the EU level. For instance, there are, as this was just said, many enhanced disclosure rules for investors, such as SFDR, which are entering into force before corporate disclosure, meaning that the data isn't fully available to comply with. The second challenge, I would say, is the coherency and legibility of the entire framework. So at the PRI, we've been advocating for a more coordinated and integrated approach to provide more consistency between the different pieces of regulation that are pushed through. For instance, there are sometimes duplications between regulations such as SFDR and the taxonomy, and there is a need to harmonize some legal concepts to create clarity for the market participants so that they can really navigate the different regulation. A third challenge, I would say, is a political and a communication one. We need enhanced communication, and there are some legitimate concern and pressure from member states, sometimes a bit of misunderstanding about the taxonomy, for instance, in terms of what it is really about. That has created confusion in the markets and raised lots of concern from the corporates and member states. We have complex political debate ahead of us related to the taxonomy when it comes to specific sector inclusion, such as gas, nuclear, agriculture, and specific delegated acts related to that. So a lot to do there. And a final challenge, I would say, this has been also mentioned, is an implementation and data challenge. And I'm sure we'll speak further about that. But as SFDR already applies since 10th of March, but that disclosure requirement for taxonomy regulation will start from Jan 22. We really need to significantly expand access to data, and the PRI signatories have actually consistently reported the lack of consistent and reliable and comparable ESG data, which is a substantial barrier to responsible investment practices. So if the EU really want to lead the way and inspire as well other markets, I think we really need to resolve those challenges.
And it will. Thank you, Elise. So a lot on the table, but a lot of it achieved already, and you see the EU on a good way. And I would agree, you know, when could we remember an initiative of global scope that the EU is actually spearheading? Let's be a bit proud of it too, led by the Nordic states, to be honest, that we're really global ESG champions, and let's really use this as a competitive advantage, I would say, because green returns can be actually received within green policies. So let's do it a bit faster now, but apparently there was the C19 break, you know, a bit, you can't deny it. So Caroline, how do your clients see it when it comes to ESG funds? Do they have a lot of appetite for them? How do the structures look like? Let's give us a look at your desk now.
Yeah, hello, Thomas, thank you very much. Yeah, there's a lot of appetite in the market, and yeah, all clients are looking to structure and set up new ESG products. It's still yeah, there is a lot of questions around it, to be honest. I mean, we do some impact funds, we see green bonds, we see a lot on the market, but nevertheless, there is still a lot of questions around it. What is an Article 8 fund? What is an Article 9 fund? When will the fund be sustainable? And as you know, and I think you come later to it, our regulator BaFin just issued a paper with his own views on what is sustainable or not. And this uncertainty, as Elise said before, makes things a bit more difficult. Nevertheless, everybody tries to do its best and to already set up products which would qualify as green products or as green funds under the respective regulations. There's a lot of questions around the taxonomy as well in the market and to try to be taxonomy conform. But yeah, as Elise said, there is still a lot of questions around, and we do not have all level 2 regulations already. So still a long way to go.
Absolutely, but lots of work for Norton Rose Fulbright, which should be a good thing, and we hope to get all the funds through the finishing line. ESG compliant, and one positive word towards the BaFin approach too, right? I mean, they get approached by asset managers and their legal advisors apparently for what should we do, you know, in this intermediate phase, and they feel very much encouraged to give some intermediate guidance. So it doesn't really double the problem. So if you interpret the European rules with assistance of BaFin, it should give you more comfort. Paul, again, as a seasoned impact investor in Germany, I remember it as one of the first. Maybe I'm unfair, but it should be true. Munich-based, a lot of OISEF funds under its belt and other structures. How do you actually see the ESG rules, the initiatives, not only the BaFin circular, which regulations, just practically answering, are most important for you guys over in Munich?
Mm-hmm. Yeah, so in general, yeah, thank you for the introduction. In general, we welcome the initiatives of the EU, the SFDR regulation, the taxonomy. So these are efforts that are necessary and needed. Still a lot of things, I can agree with you, need to be improved. Let's say the transparency, how it should be actually implemented. There are a lot of questions around. And yeah, for us, you mentioned we are on European Social Entrepreneurship Fund. So we're registered as a OISEF fund, and because of that, we didn't really have a lot of struggles to be compliant with the SFDR. So a lot of things that are demanded are already in place. So for us, it wasn't really a challenge, but I can imagine for other funds it can be. So yeah, but in general, I think what's needed would be more transparency. We see a lot of questions when we approach, especially institutional investors who do not know the differences between what we are doing as a high impact fund and other funds who also say they are impact investors. So a lot of investors claim to be impact investors, and hopefully the regulation brings some more transparency there, but I'm not sure that will work. So my advice for all investors, not only institutional, but also public investors, would be to really look into the investment criteria of a fund, of a fund manager, to be sure if there's actually an impact that is achieved. So this would be also one of the tasks for the future for the legislators, to introduce perhaps metrics to make it clear what actually impact is when it's achieved, perhaps introducing benchmarks. So these would be important steps for the future.
Very good, very good. Also to learn about your future demand for impact-related regulation. And I understand we have one polling question here too, related really to the fund structures. As we know, there's the US on the one hand, in terms of fund jurisdiction globally. And then it's all about Luxembourg, to be honest, our European EU specialist for fund structures. And that would be our question here, would be which jurisdiction are offering in Luxembourg do you see really as an ESG champion, starting with the UCITS structures, the new partnership, relatively new partnership structure for SCSP and so forth. So if you If you're in a position to vote here in the audience, apparently, please cast your vote. Yeah, attendees, strike your vote. Maybe we're in a position towards the end of our panel to give you the first results here. So Elise, apparently you're in Paris, very nice, I'm envious. How does France treat the implementation of all these EU rules and the ESG regulation? I mean, you're not actually a French organization, but as your Paris base, maybe you could give us a little insight into the French implementation status.
Yes, sure. I mean, it would have been very amazing to meet you all face to face in Paris or in Planchenoit maybe next year.
Yes,
sure. France is definitely an important market for the PRI. We have 318 French signatories, so that's overall the 4,000 signatories worldwide. And France is the third country with the most signatories after the US and the UK, with asset owners, 30 asset owners. French signatories represent 7.5 trillion US dollar asset under management. And we've seen like a really strong interest, mainly on climate-related issues. So you have like important signatories that have been part of the Net Zero Asset Owner Alliance, convened by the PRI and the UNEP-FI, and several French asset owners also have joined this initiative. Similarly, on the investment manager side as well, there is a Net Zero Asset Manager Alliance with numerous French signatories included there. In terms of policy, I think France has in some way been leading in the EU with the Article 173 in the past, and now that the EU level playing field is being implemented, there is a bit of a challenge, I guess, for France to keep the momentum. France has actually, when it comes to SFDR, published a specific decree that allows companies to, report further related to TCFD, for instance, disclosure. And they've made like an increased possibility to disclose as well on biodiversity risk for investors, which is something that we've seen growing momentum in France on that topic. So that's something that we are monitoring closely, and I think it would be interesting to see what Emmanuel Macron would be able to do to keep the momentum following COP21 and the Paris One Planet Summit. He's been heavily criticized related to the French climate law, for instance, and there is like election in France coming up, and France also had the presidency of the EU Council from January 22 next year. So definitely a lot to see and to see how the French market will react as well and continue the push for further regulations and keep is ahead of the curve in some ways.
Yes, it's interesting that France actually number 3 in terms of signatories, and hopefully, as you mentioned, we will meet next year in person in Paris to discuss with other French representatives. Our results are in already. UCITS is the ESG champion for our audience at 82%. Several answers, multiple answers were possible. And then not really a close number 2 is the SCSP at 27%, and all other structures, with little figures there. That's interesting. So classic mutual funds, if you are setting up those, right, you don't always have the choice, are apparently well suited for ESG projects. Then Caroline, we discussed already the data issue, I would call it. Can your clients, if they set up a fund, actually deliver the data, if they are to invest in other corporates, for example? How does that play out currently, or is this a huge problem for your clients?
Yeah, data is, I would say, the issue of the day, because to have the appropriate data, to be able to deliver it, and at least to define what is the appropriate data you need is still an issue. I mean, you see it when it comes to ratings as well, that there was a big concern of ESMA. We have so many different providers of different ratings. We have tools, if we have that to make things comparable and to decide what is at the end green or not green is really difficult. So it's about greenwashing, but it's not only about greenwashing. Even if people do not want to wash green, it yeah, it helps because we have not the comparable data. So the initiatives on the European level to amend the directives, to ask from companies, listed companies, not listed companies, is absolute of essence. You know that there was already a requirement for large companies to give some information regarding ESG in their reports, but in their statements. But now there is this corporate sustainability reporting, which shall come into place, which requires companies to give much more information. Nevertheless, there's still a lack of data with respect to other assets. Look at real estate, how to make real estate comparable, and how to make comparable if it's not in Europe. You know, what's about China real estate? What's about real estate around the world? So this will really be an issue we have to resolve. And if the data issue is not solved, the whole ESG initiative will suffer.
All right, we have one quick audio question, please. Audience question, apparently, but also audio. Please, team.
Yes, so one question from the audience. How do you anticipate EU regulations will inspire UK regulation, e.g. a UK equivalent SFDR or green taxonomy?
Anyone feels like answering?
Well, maybe I can quickly address that. I think the UK is trying to indeed sort of replicate the rules, but of course they are also trying to make sure that the EU markets remain a viable and interesting place to be. So it does remain to be seen how indeed the details will pan out, to be honest, I think.
Yeah, I can comment very quickly as well on that. The UK is definitely working on some taxonomy aspects, and we've actually seen that other countries are looking at taxonomies. We've heard that there is almost like 20 markets around the world, like including China, UK, Mongolia, Malaysia, Canada, South Africa, to name a few, that are working on taxonomies. And this is actually a bit of a concern for the investment communities, because we see the potential for competing taxonomy. And this is something that we definitely would like to address at the international level as well.
Right, and thanks for the audience question. Hopefully we covered some ground there too. So Paul, looking at the countries, and Elise introduced some more, particularly looking into the area of impact investing, are there other really champions? I mean, throughout your all-day business, you recognize some tendencies outside the US. Which countries on a global scale are potentially impact investing champions in your idea?
Yeah, I think you mentioned earlier the Nordics. Historically, I think also US, UK, where you have a different approach to investments in the VC sector, especially. France in the recent years has been quite active. You have larger funds now in the impact investing sector. But also Germany, I think, took some traction now. And I think there's a window of opportunity now because of COVID, because of the climate crisis, because of the EU Green Deal. There are a lot of things coming together finally, and hopefully we now have this window of opportunity where you have more and more funds, larger funds, where you can attract more investments. I think also one aspect, perhaps in Germany, large investors tend to be more reluctant, risk averse towards VC investments, high impact investments, and actually the logical thing would be, if you are risk averse and if you invest in VC, you should invest in impact funds. From our perspective, the risk profile is much lower. But this logic, it takes some while until those investors will adopt this. But this is actually the future we see in Germany, but also for Europe. Also it's mentioned by a lot of analysts nowadays, large consultancies, asset managers. There are a lot of voices now that are going towards this one direction. I think it's coming, and there's no way back. We will have a more sustainable investment industry. That's our view on this, and hopefully it will grow faster than the last years. Yeah.
Thanks, Paul. You have already qualified now as speaker for a Munich event in October, which is called VC2, where institutional investors come together on a long evening just to discuss venture capital as a suitable asset class. So I invite you hereby and will provide you with the dates later on. It's the question of data, and it's the question of a global taxonomy, Elise. I mean, apparently we shouldn't talk around the pudding if we don't get China and India, for example, on board on a global scale. Every great initiative that we follow and bring to fruition, isn't that helpful? So I think this forum, you know, starting and originating in Europe should always cover, and we did a start with the US and Canada today, should always accommodate other voices too. So is there hope? Anyone wants to give us some hope towards the end of this panel almost with regard to an approach to a more global taxonomy? Maybe Elise, I mean, this is yours apparently. What are the most important initiatives to bring together a global group of ESG champions?
Yeah, I mean, this is definitely something crucial in our eyes. The risk of fragmentation means that international cooperation is more needed than ever. Capital markets are global and they will struggle with a fragmented and inconsistent rules. The EU has gone further and faster than other regions, but other regions are catching up. And now that the US have signaled their willingness to re-engage on international stage, we see this as a great opportunity. For instance, using the G20 and the G7, where the international dialogue and exchange are reopening, this could be a great forum for discussions related to convergence of the different frameworks. International cooperation could also be achieved by strengthening the EU-convened international platform on sustainable finance. So this is a working group of different countries with also non-G20 countries involved, such as Chile or New Zealand or Norway. As well, to work on taxonomy. There is actually a China EU working group working on the harmonization of sustainable finance taxonomy currently. So this is something that we will definitely monitor further. And the US and China, there's a lot of things happening on those markets at the moment with consultations from the Securities and Exchange Commission in the US. The China Securities Regulatory Commission as well has opened a consultation on the standards related to information disclosure for companies. So we really see like a revival basically of the international dialogue on sustainable finance, which is something to really welcome and look forward, I think.
Thank you. So great. Again and again, we come back to the point of data and information and to do a little advertising. BII and Mannheim Business School have teamed up towards the end of this June for a course, an online course relay that is called Quantifying Sustainable Investment. We will have great guest faculty. Paul, welcome again. And we will have scholars from Chicago Booth, MIT Sloan, Oxford Side, Northwestern Kellogg to really focus on data, you know, and how to get this into our ESG policies. Just Google Quantifying Sustainable Investment and join us there on the faculty. Of course, a nice discount for BII members would apply. So, all right. Thank you. Very great panel. That was good. We're on a good track towards a more sustainable policy at the regulatory level, I guess. We need to get together with the global forces, apparently. China, very important on that regard, and Elise outlined how we could approach that. Thank you for now. Thank you for the All Digital Summit this year, Responsible Investment Live. Looking forward to see you in Paris, hopefully next year, maybe the same date even. We discussed this 19th May 2022. Goodbye. Have a great further conference and panels. And thank you for being with us.
Thank you. Goodbye.